Today's episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you exceptional and customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you can get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Thank you for joining us for another episode of Market Talk here on this Tuesday, June 29th. I'm your host, Jesse Allen. Great to have you with us. MarketTalkAg.com is our home on the World Wide Web. You can find all of our social media there, our radio affiliates, our streaming sources, including Spotify, iHeartRadio, Apple Podcasts, Amazon, Google Podcasts, and so many more. You can find the latest in ag news, market information, and more. It's all one-stop shop, markettalkag.com. Well, a fairly quiet day in the trade, one day ahead of those USDA reports we've been waiting on for, it seems like, weeks upon end. And here to talk about the market trade today, we bring in our good friend Jim McCormick with agmarket.net. Jim, looking at this market trade today, seemed like just kind of a quiet, calm before the storm, sort of a little bit of profit taking here and there, but really we're just kind of seemingly gearing up for whatever USDA is going to throw at us tomorrow with that quarterly grain stocks and acreage numbers.
100% agree. I mean, Jesse, this is one of the biggest reports of the year, and the fact of the matter is the way we trade nowadays, it's one of those type of reports that's kind of like buckle up and hang on, folks. Computers read the headlines, read the report even quicker than the humans do. So we're going to get two big numbers. We're going to get the quarterly grain stock number, and then we're going to get the yield, the acreage estimate. And, so what could happen is the market may surge higher on potentially a bullish stocks number, and then instantaneously sell off based on what the acreage number, or it could vice versa. We don't know how the computers are programmed to trade it and how to read it. You kind of see the volatility and away we go. But when you look at how tight the Indian stocks are in the United States, look at the weather problems we're dealing right now. The debate of acres is wide. You look at a trend yield and multiply it times the low end of the corn acreage estimate to the high end, you're looking at about a 600 million bushel swing from high to low. So these numbers are going to have a big impact tomorrow, as well as the trading down the line throughout the summer.
Yeah, and we think about the rest of the summer, and of course, weather is the other story we've been watching, and you throw that combined with these USDA numbers, and I would agree, it's really going to shape up what we're going to see in this market trade, moving through the rest of the growing season. And the weather, of course, you and I were chatting before we got on the air, we saw those areas of heavy rains throughout parts of the central and eastern corn belt the last few days, last week or so, and then, the northwestern corn belt, some areas saw a decent rainfall, but a lot of areas missed it. It's that case of the haves and have-nots. And I know the trade was kind of expecting the crop ratings to maybe go up with some of those nice rains, but we pretty much stayed steady to even a little bit lower yesterday afternoon, Jim.
Well, pretty much what you're looking at, folks, is kind of an east versus west. The ratings did improve in the east where we had gotten some rain, but if you're in the west and you're kind of continuing to miss the rains, the ratings dropped. And then, unfortunately, that looks like what's going to happen throughout the rest of the summer. I mean, the next I've been hearing and reading and seeing is if you're draw a diagonal line from the northeast corner of Iowa to the southwest corner of Iowa, you're, south and east of that line, you've got a pretty good shot of rain going into the July timeframe. But if you're north and west of that line, and the further north and the further west of that line, you are going to fight to get rain. The longer range maps are also hitting at this point a warmer, drier bias in the 6-10 day and 8-14 day. So it could be a tough sled. So right now we are definitely looking at a market of losing yield potential in the Dakotas per se, but picking up maybe plus above trendline potential in parts of Illinois and Indiana. And how is that going to divide out? Time will tell.
Well, looking at overall today, I mentioned a pretty quiet day in grains. Saw corn hang on, even though the corn market kind of fell off as we went through the trading day. Beans were right around that unchanged mark. Spring wheat looked like plenty of profit taking with that spring wheat crop today. That it seemed to me it has to be the only explanation we were down in spring wheat, because we set another new contract high this morning. We know how hot and dry and nasty it is up in the Dakotas and the Canadian prairies. Yet, we were down some 20 cents today, Jim.
Exactly. I think it was, we had Stats Canada number. I think it was too shocking. I think the big thing is, remember, it's the end of the month. It's the end of the quarter. We trade Thursday, Friday. Then we are off for Independence Day. We don't trade Sunday. We don't trade Monday. So there's a lot of reasons to take money off the table. Like I said, this report tomorrow tends to be a market mover, folks, one way or another. We saw that limit move in the bean market, a week, 10 days ago. I think that's still fresh in the fund's mind. So I think to take some chips off the table before this report is practical. The one thing I do want to mention, Jesse, said in general, the corn market was relatively quiet, except for the July corn market. The July market was up strong, and I think what we need to watch, folks, and maybe that's a precursor, maybe they're hinting at a potentially bullish quarterly grain stock report. When you're looking at the July trade at such a premium to the September market, it would suggest to me that maybe we just don't have as much corn available as what the market government is thinking in these June WASDE numbers, and tomorrow will tell that tale potentially.
So, Jim, if I'm looking at today's trade action and I'm looking into tomorrow and everything else on the marketing side, if there's any, we'll say, last minute moves that I'm looking to make with anything that I'm doing with my marketing, do you have any new advice or anything you'd want to share with producers just as they're kind of heading into this report and then maybe digesting it all afterwards?
Right now, folks, Jesse, I'd recommend look back to where you are. Go back to the basics. Look at your break evens and take a deep hard look at where you're at. The marketing across the board here for the producers is about as wide as I've seen it. I mean, we've got some producers that have sold up to 50, 60% of their grain. Now, we've been recommending selling some grain, but re-own it with calls to protect it. If you haven't re-owned calls and you've sold a lot of grain, you're at 50, 60% sold, you might consider going out and buying some maybe week 2 options for 10 to 15 cents that kind of protect you in case you do get a bullish stocks number. On the other hand, if you're a producer out there, and I've got talked to several that haven't sold any grain this year, and now you're looking at December corn at $5.50. Well, you could buy like the August short-dated options. It gets you all the way into like roughly July 23rd, July 24th. You can buy like a 520 put for less than 15 cents. That essentially gives you a $5 floor through, give you a pretty good peak of weather through this report, 4th of July 3-day weekend, as well as the July WASDE report, and see what the weather gives us. Because the fact of the matter is, we don't know what the weather is going to give us. And if we start getting rain in the plains, this market can put the top in. So use the puts to put a floor in, protect $5 corn. Think about it, folks. If I could have told you 6 months ago, I'm going to give you the opportunity for 15 cents to protect $5 futures, would you have done it? Probably a lot of you would have jumped on it. And right now I know people are bullish, but the one thing we've learned is you just don't know. I mean, everyone was still pretty bad about their positions, I'm sure. The unsold grain a week and a half ago when corn is limited down and beans are down over $1. The puts are just a way to kind of protect that equity.
And another thing that I think is interesting as well, maybe you can touch on this when we talk about the market moving of this report coming up tomorrow, but also I feel like it's a double whammy with the end of the month. You throw all of that together because typically end of the month, we usually see a lot of market movement with that money coming off the table. So to me, this kind of just creates a super volatile day, or at least the potential for a super volatile day on Wednesday.
I believe so. I think you're 100% nailed it. I mean, you've got the funds positioning, you've got funds who are long, made some decent profits this quarter. Are they going to actually want to physically lock in those profits and take money off the table? You got, like I said earlier, you've got a report that historically has been very volatile. These quarterly grain stock estimates revisions have been very tricky for the trade to get a handle on what the government's going to say and do. I would expect the same thing tomorrow. And like I said, the acreage estimates, it is very going to be interesting. I mean, the range of acreage estimates, Jesse, 91, 92 million acres on the low end to up to 95 plus on the high end. Well, to get 95 million acres of corn planted, plus maybe 1 million acres of beans, the reality is the only way we're going to do that, folks, is we're going to have found time to potentially bring grain or bring ground that maybe can sit and fallow and pasture and put it into production. Now, did we do that? I lean to think not. But, prices were attractive. When there's a will, there's a way. And, you just don't know. So, the options, managing risk going into this report, I think is critical.
Jim, going over to livestock, cattle rebounded today as the corn market weakened a little bit. So, not a bad day in cattle overall. We've been pretty slow to start in feedlot country this week. But looking at this cattle market in general, what are you seeing there as we get to the end of the month of June?
Well, I think you got to be a little bit optimistic. I mean, the nation continues to open up. More and more people are getting vaccinated, and I think that's keeping the demand stout. I think more people are traveling now than they ever have since the pandemic. The roads are crowded. Go to restaurants, they're full. That's a good sign. The weights are coming down. That's a good sign. And then you look at those placements on the cattle and feed report on Friday. Those were down. So I think if you look at the overall supply of the beef in the long range, I think that should be a little bit friendly. Then you combine the fact that opening of the economy, hopefully that'll continue to allow this cattle market to firm up. Now, I do know that one note, the box beef prices have come down from astronomical levels, but when you look at it compared to historically, still phenomenal, pricing going on right now. So hopefully that will remain supportive to the cattle market as well.
Yeah, and you mentioned those cattle on feed numbers, and that was just one of the livestock reports we had. We also had the hogs and pigs numbers out last week, and this hog market seemingly finding some support here around this $100 level. Maybe a little bit of confidence building back in after just the massive deterioration we've had in this hog market here the last couple of weeks, Jim.
Exactly. I mean, technically the market was massively oversold, and you were getting all sorts of oversold signals. So you're bringing some of the technical buyers in. I do think the fact that you've got reports that the Chinese government has stepped into China and is starting to buy pork and bring it off their market to try to essentially, refill some of their stocks in their freezers. I think the market as a world took it as maybe that's a value where the Chinese figure it's value that they're buying down there. Maybe I should step in and buy. And like I said, the fact of the matter is the world economy continues to improve these vaccines. And the Chinese, you never know. The fact of the matter is also, the hog disease that kind of demolished the Chinese, hog sector just a few years ago has not been eradicated. It's still popping up from time to time, so you never know when one of those big units, especially now, Jesse, that they kind of got rid of the smaller family units and now building these mega producing. If they would have an outbreak, it would probably be pretty devastating to the hog industry.
Very, very true. Jim, outside market wise, seemed like a fairly quiet day, and the energies and the S&P and the Dow and all that stuff, the stock market. Any outside factors you're watching playing into the grain trade right now?
Keep an eye on the dollar, folks. The dollar kind of had a big surge. It's kind of paused a little bit. It does feel like maybe it's going to try to make another move higher. In the long run, that's kind of negative commodities. There's a lot of people earlier, and this may be, as we talked, even the month into the quarter, there's a lot of people at the beginning of the quarter were saying, sell the dollar, buy commodities. That was the trade du jour. That seems to have kind of waned a little bit, at least temporarily. So that's allowing some of these commodities a little bit of price profit taking, maybe the dollar going back up. But if the dollar were continue to break out, make new highs, that would be a little bit negative to U.S. commodities as it makes our product more expensive. But it's not all that depressing, Jesse, for the U.S. producer on the grain side of the equation. The fact of the matter is the world supply continues to tighten. The Canadians, they're not going to have much of a crop. It looks like they're fighting a heat wave, just like our northern plains are. So that's going to affect their spring wheat. There was a frost freeze that hit parts of the late season corn in Paranon. Now there's talk that crop's going to be sub 90 million metric tons. And the fact of the matter is that crop falls that low, there's just not enough other sources in the world to offset that. Some of that demand is going to come to us. Right now, the government has U.S. demand about 300 million bushels this year, lighter than this previous year. I think that's way understated. It's probably going to go higher, and with this frost freeze, that almost makes it a certainty that the demand will be revised higher. The question just is how quick will the government do it.
And that's a great point. You brought that up there as well with the Brazil crop. And I think it's going to be a little bit because they're talking more frost here tonight into tomorrow. I think it's going to be a little bit before we know the full extent. But you're right. We're hearing that we could be sub 90 there. And that would definitely be a huge blow to the world side of the equation for corn, Jim.
Yes, I mean, plain and simple, our research suggests if you get it below 95 million, they could bring 250 to 300 million bushels worth of demand our way. We had done it and looking below, if that crop would happen below 90. The only thing I can tell you is it puts any more. That just puts that much more pressure on where we stand tomorrow. Yes, because think about it. I mean, if you get a quarterly grain stack that would suggest ending stocks are a little bit tighter than what we think and maybe a lower acreage number than what the trade's thinking, now you got a demand situation in the world where you got livestock to feed. China, I'm talking about, you're setting yourselves up for a potential interesting second half of the year. Now, the one commodity in the grain we did not talk about a little bit was the old crop beans. If any producers have some old crop beans, I'd be a little bit leery about that. Unlike the corn spread, the bean spread's kind of narrowed up right now, and we'll see what happens. But that makes me wonder. It looked like at one time we could run out of beans in the United States, but the spreads are suggesting maybe we have enough to get us to the new crop. So something to keep an eye on, the producers who have any old crop beans left. Maybe time to start getting rid of those few that you might have.
Jim, any other final thoughts you have for us here as we wrap up the show today and look ahead to tomorrow's reports?
Well, my best advice is, like I said, if you want to place orders, get them working. One thing we like to tell people on bigger wild report days: if you have wish orders, remember the range of the beans is $1 higher, $1 lower. If you got some beans to sell, maybe put a wish order in with your broker or cash market $1 higher. Same thing for corn. The limits are going to be wild. These are the days where you could maybe kind of pick off a higher low that you normally wouldn't expect. And I think if it broke hard, personally on the corn, if you got a bearish acreage number, you might get a hard reaction down. But then you're going to come out of the holiday weekend, and we're going to go right back to trading weather, and we'll see if the Dakotas and Minnesota can get some rain.
Well, Jim, I know tomorrow is going to be a very busy day, but of course, you and the team there at agmarket.net, great crew, a lot of analysis. You can help out a lot of folks, and people can reach out to you via your website or check out the app, can't they?
Correct. Just go to agmarket.net. You can go to our webpage site, as well as kind of link over to our app. That'll help you, develop a marketing plan.
Jim, appreciate the time as always. Thanks so much, and we will talk to you again soon, my friend. Thank you.
Thank you for having me.
Jim McCormick with agmarket.net, our guest today here on Market Talk, brought to you by Growmark FS. Find us online, markettalkag.com. This has been the Tuesday, June 29th edition of Market Talk. I'm Jesse Allen. Have a great afternoon.